You're seeing many fund managers kind of capitulate, saying this is no longer a reflection of reality. I can't understand these markets anymore. The narrative of we are in an existential threat and national security around artificial intelligence. That's the narrative to justify additional money printing, which is then pushing more of the index fund money into a smaller and smaller number of companies. So within the stock market, you've also got a K-shaped stock market where many companies are suffering. Like, the economy is not doing well. Tariff policy and the trade war were just a way of resetting the world order to a multipolar world, because China's already won. So the whole renewable thing in the West was a scam to kind of take down Europe. That goes into the Ukraine situation. This is too geopolitical and strategic, given that the whole world is moving on to this AI, robotics, surveillance state. And so, we're just going deeper and deeper and deeper into corporations extracting as much value from the government, indebting them, enslaving them. I mean, corporate control of America, 1000% dependent upon the stock market continuing to go up. And they can never let the stock market or real estate market go down, because if you get the double effect of stock market down and real estate down, you blow up the whole thing. So the government will prop it up until the last bond is sold. Full-blown 100% capture by the financial industrial complex. They own every aspect of the West at this stage. And that brings us into the European side, which is destroy Europe, destroy UK, and then buy up all of as many resources as possible, and use the European Central Bank and the Bank of England in order to just get as much money into propping up the US stock market.
You're watching CapitalCosm. My name is Danny. It is November 26th, 2025, and I'm happy to have Simon Dixon back on the show today. You guys really enjoyed the last podcast we did about a month ago. And so, Simon, thanks for coming back.
All right. Yeah, I read all the comments, so let us know. Hopefully we can live up to your expectations in the second part, but let's jump right in.
Yeah, we've got a lot of stuff to talk about. I mean, we were just discussing some of the key points, including, from the geopolitical side of things, we have this 20-point peace plan between Ukraine and Russia. I'd like to get your thoughts on where you think that's heading. You've got the comments from David Sachs claiming that AI is essentially a national security issue because it makes up such a huge chunk of the GDP, AI investment, that is. You've got the stuff going on with MicroStrategy and JP Morgan. Of course, you're a big Bitcoin guy as well, so very interested in getting your take there too. And then we've got so many other things we can discuss, but let's just start off with what's occupying your headspace right now. What's front and center on your radar screen? And we can kind of touch on all these points as we move on.
Okay, yeah, I think it's really important. So last time we talked about this concept of the financial industrial complex, and I think we have a live operation that people can see, which is the JP Morgan versus strategy concept at the moment. So it was announced today that if you go back, strategy is essentially a Wall Street vehicle dressed up as a resistance movement in order to centralize as much Bitcoin as possible and vassalize the company by getting lots of corporate debt investors, hedge fund investors, and stock investors, all the financial industrial complex, as it were. So originally it was like an arbitrage vehicle between Bitcoin and the stock price, where you could make money because it was trading at approximately 3 times the value of the Bitcoin. And it has an operating business that generates, maybe 100 million to 500 million a year. And so it brought in many of the hedge fund speculators to have a vehicle to arbitrage between all the different financial products. And immediately, Jane Street became one of the primary investors in that. And then as the price of Bitcoin went up, the market cap of MicroStrategy went up. It's now called Strategy, MSTR. And you start to see different types of leverage financial products. So then you start to see products where debt investors could come in. So you got those that would invest in corporate bonds. And you have these perpetual products that essentially allow Strategy to buy more Bitcoin in exchange for a yield. And that allowed corporate bond investors to come in. And now you started to see, as the market cap went up, it started to be included in some of the indexes. And so one of the companies that is in the JP Morgan portfolio or umbrella is created like a NASDAQ 100 index that would include it. So now you get these passive flows from ETFs and those that are, looking to invest in these indexes rather than the individual stocks. Then later you get, a requirement for those that, because it's a very volatile stock, those that had accounts with JP Morgan, if you wanted to engage in any type of leveraged exposure into Strategy, they increased the margin requirement from 50% to 95%. And so suddenly you start to see that through these different types of mechanisms, they can oppress the price of the stock and at the same time influence how much Bitcoin can be bought. Now, at the same time, you have the entire complex that's being built. You got the BlackRock ETFs. You've got more and more including it in different types of indexes, in pension funds. And then Goldman Sachs and other members of the complex would start creating their futures contracts, perpetual futures, and every type of paper Bitcoin you can imagine. And then suddenly you can send out your hedge funds in order to, push out different narratives. And so through this mechanism, they've built via Strategy an entire Bitcoin financial industrial complex. And this is just exactly how it works. Then you suddenly slap a credit rating on the debt that's connected to Strategy, and you can vassalize and make the entrepreneur and the executives and the chairman subordinate to the capital calls. And so if you want to raise more finance, which Strategy is a vehicle, the more it raises, the more debt it takes on. The more debt it takes on, the more vassalized into the financial industrial complex it becomes. But at the same time, it's able to maintain a narrative that Strategy is taking on the financial, taking on the bonds. It's created this yield-based product based upon speculating and arbitrage that's paying like a 10% yield. And you get all these different types of narratives when really Strategy is just a vehicle for centralizing as much Bitcoin as possible, so that when they want to, try and get as many people through their rampant speculation to get, their Bitcoin within more and more of the centralized structure, it's like the perfect classic PSYOP vehicle that you can imagine. Now, Michael Saylor is very, very popular, and this isn't an attack on Michael Saylor. This is what they do to executives. You once you have a public company, you are in the complex. There is no way of getting out. And so what they did is they took another Bitcoiner called Jack Mallers. He then took funding from SoftBank and Tether, and then was able to, and then the investment bank, Cantor Fitzgerald, would do like a SPAC to reverse all this funding into a public company. And at the same time, the narrative then goes, hey, what is Strategy? Strategy is just a Bitcoin treasury company, and the net asset value, the Bitcoin to the share price went from like 3 to about 1.15 over time. So then you can use that narrative to say, well, we're different. We're a different type of treasury company. We're going to have an operating business, and what we're going to do is we're going to issue loans in partnership with another company that would have taken on Silicon Valley funding, that's also getting those dollar pipelines from, these different types of debt instruments. So now You persuade everyone to put their Bitcoin in custody, borrow against your Bitcoin, and then whenever you want to crash the price of Bitcoin short term through this suite of products you've created, you can margin call a bunch of people that were borrowing against their Bitcoin. You can margin call the traders that were levering against their Bitcoin. And it just feeds the complex of trying to get as much Bitcoin within a Wall Street wrapper dressed up as a resistance against Wall Street. So, I think it's really important for people to understand these psyops. The real resistance is holding your Bitcoin in self-custody outside of the system. The real resistance is not trading, not levering, not borrowing against your Bitcoin so that you don't, create some fiat currency backed by your Bitcoin. The real resistance is being able to invest rather than trade, because Wall Street benefits from all this volatility. So essentially, I hope more and more people can see that now. And then suddenly what happens today, JP Morgan comes out and says, we've created a Bitcoin-backed bond. But when you look behind the scenes, it's actually a structured product that will basically, benefit from rampant volatility, allow them to protect their downside if the price goes down 40%, but then benefits if the price in 2028 goes significantly higher. And so really, you've just created these crazy, rampant, speculative vehicles of structured products. But everyone gets lots of marketing towards this because they're saying, short JP Morgan, go long MicroStrategy, when what you should be saying is boycott all of that, short JP Morgan if you want, but they'll benefit from that anyway because they hedge every position. But the reality is the resistance is just not engaging and holding Bitcoin in self-custody. But this is a classic psyop, and slowly but surely you take what was meant to be a Bitcoin treasury company, and now they hold like 650,000 Bitcoin from, being servitude to its investors. You've got about $54 million in cash from your operating business. But as they introduce new debt instruments, they've now got to pay dollar dividends with liabilities of about 700 million. So 54 million cash, 700 million dollar liabilities. How do you pay that? You either have to sell some of the Bitcoin, you have to figure out how to get a bigger operating business. And guess what they announced? We're going to become a bank and we're going to now allow you to borrow against your Bitcoin. So you get a bigger operating business, or you're going to have to sell more equity or sell more debt. The more equity you sell, the more debt you sell, the more servitude to the investors you become. If you can create a new revenue business, you end up becoming a bank, which is more leverage, mine more fiat currency using Bitcoin as collateral. And then you can margin call more people, or you end up selling the Bitcoin, which was a violation of the original promise. So if the financial industrial complex wants to create sell pressure in order to crash the price of Bitcoin, margin call more people, they can just manipulate the price as strategy. So people were speculating on whether strategy is going to go bust or whether it's a big FU to the system. It's actually neither. It's a perfect vehicle for manipulating the short-term price of Bitcoin to try and trick as many people. And the more successful it becomes, the more Bitcoin gets centralized into this wrapper. So I just hope that people understand, the real intent of these products and don't fall for narrative, because everyone's marketing more and more centralization of as many Bitcoin. But fortunately, we're still 71% self-custody, but Wall Street is really going for it. And they don't mind everyone saying, screw JP Morgan, because that's really perpetuating the cycle and using useful idiots in order to market the message.
No, it makes perfect sense. How do you make sense, though, of this rather predictable move in Bitcoin over the last, I want to say 10 years, since about 2015? I'm sure you've seen this analysis, but effectively from peak to trough, you've got about the distance from peak to trough in terms of time is about 365 days for every halving cycle in the last 10 years. And then from trough to second peak, it's about 1,000 some odd days, but it's eerily consistent. Have you seen this?
Yeah, so in Bitcoin, because the way that it's constructed is new Bitcoins are created every 10 minutes and they're rewarded to those that are securing the network, miners. And so they add blocks, they put all of the transactions in a block, and every 10 minutes, new Bitcoin, that's the seigniorage. That's how the new Bitcoins are created. There's only ever going to be 21 million Bitcoins, and you can mathematically know how many Bitcoins are going to be created. And they stop being created in 2140 when miners just receive transaction fees alone rather than the block subsidy. And every 4 years, the number of Bitcoins that are created every 10 minutes half. And so now we're at the point where 95% of all Bitcoins have already been mined, and there's only 5% that will be mined over the next 120 odd years, or approximately. And so in the original early days of Bitcoin, there was 50 Bitcoin released into the market every 10 minutes. You could mine on a laptop. It didn't cost you much electricity. Now you've got the largest distributed supercomputer in the world with, nothing that compares in terms of the electricity and security behind it. But when you went from 50 Bitcoins every 10 minutes to 25 Bitcoins, that was a big shock to the supply. And so that would be less Bitcoin that miners would have to sell. And you'd have to, there would be more and more people buying them as Bitcoin progressed. Then it went from 25, you had the first 4-year cycle, the next 4-year cycle, then we went to 12 and a half, then you went to, 6 and a quarter, and we're now up to, 3 and an eighth. And the next cycle will happen in 2028, I believe. Now, the reason that it had significant impact on those 4-year cycles historically is because that was factored into the psyche and it would have a major impact. But now there's only 5% of the Bitcoins remaining. It has diminishing impact each time. And so some people believe that the 4-year cycle still prevails. Others believe, well, we're moving into this $2 trillion asset. And so therefore the market has changed, the players have changed. I personally believe that the 4-year cycle was something that prevailed previously, but now we're in the Wall Street phase where Wall Street are able to manipulate the short-term price, but the long-term price, you've still got, as liquidity goes up, as market cap goes up, you still got the world's only fixed, scarce digital asset. So long-term, it's very hard to manipulate, and the cycle prevails. But short term, I think you're going to be subjected to more and more influence from Wall Street as well.
Yeah. So here's what I'm referring to. So if you take, like, for example, you've got your last bottom here in November of 2022. Distance from that bottom to the previous top was all the way out here, 365 days. I don't know if you can see it. It's right here, 365 days. And then you take that bottom and you go all the way out until up here, the most recent top, the most recent all-time high. That's about 1,065 days. And interestingly enough, you go back and you replay that in other instances. So say December 18 to November 2021, that's 10,066 days. And then you've got from the 2017 peak here to the 18 bottom, that's 365 days. So how is it that it's so extremely precise from peak to trough and trough to peak each cycle?
Yeah, I mean, well, it's interesting, and we can speculate on different things around that. I prefer. I've in my career, I've avoided price predictions for Bitcoin all the time. I think cycles can change. Maybe the cycle holds, But the message that I really give people is that we know the properties of Bitcoin. We know that there is a 4-year cycle in built. We know that there has been diminishing returns each cycle. The original one was like 2.7 million% returns. And then the last one was like 2,000% returns or whatever it may be over those 4-year cycles. And so what I encourage people to do is for the portfolio, the parts that they want to get exposure to Bitcoin, just buy every month, whatever the price is, have a set amount based upon how much fiat currency you're bringing in. As the price goes down, you get more Bitcoin for your money. If the price goes up, your portfolio value goes up. But build that habit for a minimum of 4 years. And every single person that's ever done that has never come back to me and said, "Hey, Simon, I can't believe you made me do that." So, you know, you can look at these patterns, but I kind of just focus on the accumulation and the recognition that this is a scarce digital fixed supply asset, and to avoid all the things that can get you blown up in that 4 years, like leverage and loans.
Gotcha. Well, let's go ahead and segue over to AI because we talked about this in my previous podcast with Chris McIntosh. But you had this tweet, or I believe it was a tweet, but this quote coming from David Sachs, making the claim that AI is such a huge component of the annual GDP of the United States GDP that AI investment that it's effectively a national security issue. In this case, and in this view, you also had Howard Lutnick recently say that, well, you know what, we may as well just give in and just, work with China in terms of chip production. A lot of concessions are being made, and a lot of signs are being shown that they need this AI trade to really work out. It seems like they're dumping everything that they can into making AI work. Now, my question to you is, they did something similar in 2008. They said that the banks were too big to fail. Today, they're saying AI is too big to fail. We have to bail out the banks. Are we going to have to soon bail out the AI companies, the Googles, the Microsofts, the OpenAI, the NVIDIAs, the Oracles, and so forth? What's really going on here? Whoa, in terms of
Yeah.
and then one more thing, you also have the Genesis mission recently announced by President Trump as well. What are some of the key points from what you understand from that document?
Yeah. So we already have decided that government funding should be used to prop up artificial intelligence. The first announcement you had from the Trump administration was all of the tech bros and the AI key players surrounding Trump announcing a $500 billion Stargate project. That involved Oracle with Larry Ellison. It involved Sam Altman with ChatGPT. And then it involved NVIDIA, of course. And so you've got this circular economy of creating the software that needs access to the data centers and the data that then needs access to the chip. So that's the NVIDIA ChatGPT. And then obviously you've got Microsoft as well. And you've got all the other players in that ecosystem, as well as the military aspect to it, which is the Palantir side. And so clearly artificial intelligence and cybersecurity is the next mechanism for manufacturing fear in order to make sure that the government prints more money, and then it goes into propping up those stock prices. And so while we have a K-shaped economy within the actual economy, where the rich are getting richer and the poor are getting poorer, and wealth is concentrating in the hands of fewer and fewer people, because government money printing is going into propping up the stock market. And we've got a $5 trillion valuation on NVIDIA. About 3 months ago, it was 4 trillion. Now it's 5 trillion. And so we've got these wild valuations that no longer reflect the value of the market. And people are getting confused around what drives the market now. Now, this also plays in, and I'll go through. Basically, the market has now gone from, and you're seeing many fund managers kind of capitulate, saying this is no longer a reflection of reality. I can't understand these markets anymore. It's because historically they were analyzing, earnings per share and trying to project out a forecast of what the company would be valued at. But now we've hit this phase where the market is only a function of three things. The first thing is the ability for the government to roll over its debt, whether the Federal Reserve prints the money and does it through quantitative easing, or whether you create an elaborate scheme in order to artificially push down the interest rates so that you can dump the debt on stablecoin issuers or deregulate pensions so that they subsidize the rollover of the debt at these below market rate interest rates, or whatever mechanism you have to be to roll over that debt. As long as you roll it over, that's the first thing. And because the government is deciding how that money is effectively allocated, which is effectively a front for the financial industrial complex and the technical industrial complex and the military industrial complex, they basically get to lobby where that money goes. And so the second thing that's driving the market right now is also geopolitical significance. And so the only people that are getting access to this government funds as the government debt is going up and up and up is those that have that geopolitical significance. Now, how does the financial industrial complex control that? Exactly the same way as they did with MicroStrategy. They manipulate the share price through the derivatives, hedge funds, private equity, public equity, and access to bond equity and debt markets for whether you get included in the index fund or not. And so if you get included in the index fund, then you get all the passive investment from all the pensions, all the insurance premium, all the endowments and the trillions that are coming in. And so really the share price is a function of access to the index inflows, which the financial industrial complex can kick you in and out, geopolitical significance to get access to money printing, and then thirdly, controlling media narrative, which is what we saw as well. So you've got a market that, and remember, all the media is within the public companies and some private companies as well. And so it's a pay-to-play system. If you want to, whatever you want the Bloomberg to say or the Financial Times to say, that's a reflection of where they're trying to get capital flows to go. And so when you see these narratives pop up, and the narrative of we are in an existential threat and national security around artificial intelligence, that's the narrative to justify additional money printing, which is then pushing more of the index fund money into a smaller and smaller number of companies. So within the stock market, you've also got a K-shaped stock market where many, many companies are suffering. Like the economy is not doing well, which is having a knock-on effect on many of the companies. But the massive mega companies are propping up the whole index so that Trump can come out and say the stock market is the best we've ever had. It's awesome, but it's propped up by the bond market, the index funds, which is the American people where foreigners are selling, and all of these media narratives that perpetuate this cycle. So we've absolutely hit this. Now, does that mean that the market's going to crash and we're going to end up with a 2000 dot-com boom and bust scenario or a 2008 over leverage? Well, these are different things because in 2000, we didn't have this ability to access, the same amount of capital. It was done primarily through venture capital and various other mechanisms. Now, 2008 was an attack on the actual dollar. So if you allow real estate to crash, that's not a stock market crash. That's actually the dollar being destroyed, which makes the banks go bust. And if the banks go bust, they're the creators of the dollar. And so the whole system collapses. So they genuinely are too big to fail. But at the same time, now we've created this environment where you have to keep the stock market going up. So this is kind of a new paradigm or version of that cycle. And so you have to continually sell the fear that we're in a trade war with China, If the US government doesn't pump more and more money in, then we're going to lose. So at the same time, you got to ask, is it really, what is the China relationship? Well, if you remember what I said, tariff policy and the trade war were just a way of resetting the world order to a multipolar world, because China's already won. China's got the manufacturing base. China's got an economy which is not owned by banks, which are asset stripping the economy and pumping it into the stock market. China's actually investing in all the forms of energy it needs to power this artificial intelligence. So the whole renewable thing in the West was a scam to kind of take down Europe. That goes into the Ukraine situation, and to reallocate money and get access to some of the government money printing. Within China, they have built massive, every form of energy you can imagine, wind energy, renewable energy, solar energy, and they're using it all. And so while they're still buying, and they have the largest oil and petroleum reserves that they've been buying off Saudi Arabia and the Middle East to prop up their sovereign wealth funds, which is buying all the assets in America, interestingly, they have these massive amounts of energy. Now, per capita, because they got 1.4 billion people, America's 350 million. Per capita, there's still more energy within America. But China's got access to all these, these flows, and they built up their reserves and their partnerships with the Gulf countries, with Iran, with Russia, with Saudi Arabia, with the Gulf countries, and they're building all of that out. And what are they actually doing? Well, America is going for the closed-sourced model. You've had a bit of resistance against that from Meta, but China's gone full-blown open source. So everything that America's producing, they are open sourcing. And now that they're trying to push in the American model.
Hey, Simon, you stopped. You had some streaming issues there for like 10 seconds. If you don't mind going back to the point where you said Meta, aside from Meta, there's been pretty much a closed source model here in the United States, in contrast with the open source model in China. That was when you dropped off.
Yeah. So the issue that valuations have gone out of sync from their earnings per share. They need to generate revenue now to justify, these flows. And so the media is having to do more and more propaganda in order to get more capital in, because the investors, the traditional matrix of the investors, aren't really working. So essentially, you're moving to more and more of government propping it up, more and more government control. And so you need a deeper and deeper narrative to prepare for the fact that inevitably, when you're in a fiscal dominance and you're devaluing the dollar and you're trying to get as much government debt out into the world, you got to have a narrative that says there's a reason why we're not giving it to you, the American people. We got to put it over here. And so they're trying to get the model, and China's saying we're going to open source it because we're subsidizing it. We don't mind subsidizing it. That's our model. But we don't need the revenue from it because we're actually just, we've got all these energy flows that are being propped up from it. Whereas America, they got to find, how do we justify the revenue for these companies? And the revenue's just not there. And so we enter into this world where absolutely we are already in a government bailout. We are already in an operation that's resetting the world order. But China came along and banned all of its companies from buying NVIDIA chips. They said, we think it's a national security issue. But the government's trying to get NVIDIA, they're pushing out the narrative that we're not selling them to China for the trade war and national security reasons. They're actually trying to get China to buy them, and they're getting the Gulf countries to buy them, which is why you had that big investment with MBS from Saudi. They want to plug all their energy into data centers in the Middle East. They want China to buy because they need to prop up the revenue of NVIDIA moving into this $5 trillion valuation company. But the reality is they can't let it crash. This is too geopolitical and strategic given that the whole world is moving on to this AI, robotics, surveillance state. And so, we're just going deeper and deeper and deeper into corporations extracting as much value from the government, indebting them, enslaving them. I mean, really, if you take auto loans, credit card loans, government debt, the additional liabilities in Social Security, Medicare, the Department of War, rather than that $38 trillion debt, you got more like 600 trillion across all these additional liabilities if you take all those mortgages out into the future. So, we are full blown corporate control of America, 1000% dependent upon the stock market continuing to go up. And they can never let the stock market or real estate market go down, because if you get the double effect of stock market down and real estate down, you blow up the whole thing. So the government will prop it up until the last bond is sold. And foreigners are no longer buying those bonds because they're going through de-dollarization. And so they're creating more and more ways of figuring out how to dump the bonds on the American people, get them to subsidize them at the 0.25% rate, roll them over on short-term treasuries, because the long-term rate is fluctuating between 4 and 6%. But Trump wants the debt rolled over at 0.25% or 0.5%. And so they're actually installing, they're changing the construct of the Fed. So now the banks, they control fiscal policy, monetary policy through lobbying. They control access to capital in the stock market, and they're the number one purchasers and recipient of all the yield in the bond market. You have full-blown 100% capture by the financial industrial complex. They own every aspect of the West at this stage.
Hey guys, quick pause from the podcast, but this is something I feel is really important to let you in on. Back in 2020, before I even started this channel, I was looking for an edge, a way to find the big opportunities most investors never even hear about. That's when I found Capitalist Exploits Insider. From day one, it felt like I suddenly had my own team of world-class market pros working for me, digging up trades all over the world, doing the deep research, and handing me ideas that had massive asymmetric upside. Stuff that I would never even think about. Since then, my gains with them have blown past the S&P and the NASDAQ, and it's honestly the single best newsletter I've ever subscribed to. And that's not me blowing smoke. That's for real. I've interviewed their publisher, Chris McIntosh, more times than I can count. In fact, my latest conversation with him is linked in the description box down below if you want to check that out, as well as a pinned comment. And every time, I'm reminded why I've stayed a member for years. Right now, they're offering a special $1,000 discount on the Insider subscription, but it's only for CapitalCosm viewers, so you're only going to get it by clicking the link down below in the description box or the pinned comment. You're not going to find this anywhere else. Click the link, lock it in, and start getting the same game-changing research I've been using since 2020. You look at all of the other bond markets as well, the Japanese 10-year, 30-year, the Chinese 10 and 30-year, the European, the German, the UK bond yields, the United States bond yields, all of these bond yields are going up, and by virtue of the value of these bonds are going down. Are we in the process of seeing this, some sort of shift in how bonds are constructed? Is there going to be a complete reset in the way bond markets work, in your view?
Yeah, so what we're seeing economies like Japan that, although they are part of this financial industrial complex through the Japan carry trade, they do actually have surplus in capital. They've got a lot of assets, although that they're propping up 1.2 trillion of the bond market for the US. They've got trade surplus and they've got capital investment. So they could potentially, if they wanted to be a part of the operation to weaken the dollar, they can just sell off their treasuries. They can sell off some of those assets. And the best way to do that is to increase the interest rate. So they've started to pull away from the Japan carry trade. I think there's a 50% chance that in December, Japan increases rates again. So it's 50-50. but now they're at the highest they've ever been, 2.75%. That is a strategic weakening of the dollar, strengthening of their currency in order to make sure that people are selling their US-based assets, and and then selling their dollars, which means buying the Japanese, the JPY. And then they're saying, what do we do with our JPY? Well, we buy JJBs and we buy Japanese assets. And so it is a managed unwind of the Japan carry trade. I don't think it's going to happen in a spectacular formula because they are deep in debt, 250% debt to GDP, but they have the matching assets and they have the manufacturing and they have the trade surpluses to manage that in a different way. America's got world reserve currency. They are being shrunk into regional power, which means weaken the dollar because you need all the other currency pegs to break. So Saudi pegs its currency, Hong Kong pegs its currency. You have many people that many countries that peg their currency to the dollar. What's happening at the moment is Saudi is selling more and more of their treasuries. I mean, you've got stable coins like Tether that have more treasuries than Saudi Arabia at the moment. And so Saudi is selling more and more of their treasuries and their gold reserves to maintain their peg at the moment. At the same time, all of their revenues coming from China buying their oil, and they're trying to diversify their economy by buying up all of the American AI assets so that they can persuade NVIDIA to build their data centers in the Middle East, and allow those chips to go into the Middle East. So they really want to get the vital infrastructure, using the Americans to build it, but in Saudi. And so they're using Chinese money to buy up and invest in all of those things.
Why is Saudi an intermediary? Why the Middle East?
Well, if you think about the Middle East in the post World War II Bretton Woods order, they were always subjected to the forever war model. And so when the military industrial complex and the manufacturing base in America, they never wanted any country to unify around their resources. And so strategically, America would always make sure that the Middle East is continually in a state of war. And so Israel was their mechanism for ensuring that there's always a state of war. And they would fund all the different proxy groups and militias like Al-Qaeda and ISIS and various other ones, and Hamas via Qatar and various other, so that they could get all these different bases and force these pegs and force this IMF debt. And then obviously the Middle East is in the region of North Africa. Those are all the resources, the rare earth minerals. But China started doing their Belt and Road Initiative. That made the IMF less and less relevant. And then the GCC started taking many of their petrodollars and investing and buying decolonization. And so what do they have? Now they have vast sovereign wealth, not as big as BlackRock. BlackRock's like 12 trillion. Collectively, they got about 5 trillion, and China's got a lot more of undisclosed, as well. But they have this system where they don't have to tax their people because they use their oil. They didn't privatize their oil. They use that in order to build their sovereign wealth. They're looking to diversify away from their dependency on that oil. And America became energy independent. So America, once it, in the first Trump administration, became energy independent, they started competing with the Middle East to export oil. Hence why you had all the Russia-Ukraine situation and Europe stuff. And so from that aspect, they have a tax-neutral jurisdiction. They've got all of these crypto rails that allow for capital inflows and outflows that are being built. They got all the money that's coming from the real manufacturing economy with China that's buying all of that oil because they don't have it. They get to sit between many of the regional blocks. The Gulf Cooperation Council, the GCC, BRICS, ASEAN, the SCO, the Shanghai Corporation Organization. They get to sit between those blocks and America as a regional power. So their relationship, in order to, control who controls America, well, it's the corporate interest, it's the financial industrial complex. So what you see is the banks co-investing in buying up Europe strategically weakening Europe so they can buy all the assets on the cheap. And every deal is between BlackRock, the financial industrial complex, and the Gulf countries. And so they are basically buying up as much of the key American assets. Now, what do they want to do? For this artificial intelligence, there was an estimate at the last conference that they need $27 trillion of investment to provide enough energy to power all of this robotics and AI. And they've got nuclear energy, and so they want to change their nuclear program. And then you've got also the weather operations, because they got water issues. You need to provide water to all these data centers. So what we're seeing right now is the dismantling of the forever war and replacing it with invest in order to build up data centers. And they want to sit in the middle. And so this really changes global power forever, because, the post-World War II Bretton Woods order was to ensure the Middle East could never actually utilize their energy. But now, because of the rising power of China, the Middle East is now saying, we'll buy up assets and you can no longer create the forever war model. And the banks are saying, sure, we'll weaken the dollar, we'll co-invest with you, build the infrastructure in the Middle East, and then please help us partner with China so that we can enter into this multipolar world and maintain some of the bank dominance or financial industrial complex dominance. And then that brings us into the European side, which is destroy Europe, destroy UK, and then buy up all of as many resources as possible, and use the European Central Bank and the Bank of England in order to just get as much money into propping up the US stock market, and then also return the banana republic in Central and South America so that the military can make up for lost profits and make sure that that's happening in the original, banana republic model in Central and South America. So weaponize the media to pretend we're taking on the drug cartels, and weaponize to make, for as long as Europeans believe that they're defending democracy and that Ukraine is something they need to defend, they'll rinse that and milk as much money as possible from that and make sure it gets back into the US stock market to continue propping it up. The weaker those economies get, the more you can negotiate all of these, selling more and more in oil and gas to the Europeans, and making sure also that Russia ends up closer and closer to BRICS. And so now you've got these Power of Siberia 2 pipelines being rebuilt between Russia and China, which is like a multi-decade project, which completely, subsidizes Russia into many of these blocks and just cements the multipolarity and America into regional only. And then I think the banks are doing a, weakening of the dollar to do to the dollar what they did to the pound, which is make it a regional currency rather than a global reserve and knock off all those pegs.
How does Ukraine funding go into the U.S. stock market?
So what happens is, so you have the European Central Bank and the Bank of England that need the justification to print money and push it into NATO budget. And so if you can get the NATO budget to go up to 5% of their GDP, which is what was negotiated, then you've got a bunch of money, and then you can use sanctions in order to confiscate the Russian money in the European banks. Now what you do is you say, America says, we're no longer funding the war, and you had that theater between Trump and Zelensky. You had the humiliation ritual. What did Zelensky do? He then came back with the theater with Keir Starmer and the Europeans. And the Europeans were saying, we're going to step up. We're going to defend democracy. We're going to become more independent of America. And then J.D. Vance came along and said, hey, you wokey, leftist, socialist, communist, LGBTQ, crazy rainbow fairies destroying your economy by investing in nuclear energy and, investing in climate change. He pushed that narrative. We're the capitalists. We're the ones that are doing things right. Europe, you need to change. When really Europe is just a vassal for the US stock market. The European Central Bank and the European Union centralized all of that money. so that when you print it via NATO budget, it goes back into Lockheed Martin, General Dynamic. The weaker the economy gets, the more deals BlackRock does. UK basically uses its economy to collateralize via the IMF, and then the money goes right back into the US stock market. And essentially, you have the perfect narrative, because meanwhile, in the UK, people are like, there's more homelessness on the streets. My bins are no longer being picked up. There's rats around the street. There's famines happening. We've got homelessness. We've got drug addiction. We've got wealth inequality. We've got inflation that's being destroyed. And then what do? You put more and more open borders. And then you say, hey, don't look at us. It's not the banks. It's those pesky immigrants. And then you put the immigrants in hotels. You privatize the whole industry, make a shitload of money out of the privatized, and BlackRock's buying up all the resources, and they're going right back into the stock market price in the US. And now Canada, Australia, Mexico, South America, Central America, Europe, UK, they're just being used as piggy banks, asset stripped. And then the financial industrial complex and the Gulf countries are just cleaning up. And then the Gulf countries and banks get to determine what happens with the money. And meanwhile, all of the UK people, European people, American people, they get to say it's because of those immigrants. So what does the government do? They send in the privatized military and police. They detain people. That's all propping up the price of Core Civic, Geo, the different privatized prison industries. And what comes along? Alex Carr comes along and says, we can sort the borders out for you. We can get rid of all those pesky immigrants. Use Palantir. UK says digital ID, central bank digital currency. America says we'll go on stable coins. We'll get all that Doge data. We'll manufacture as much of these fear and operations, because we're moving to a surveillance state, and Palantir is the chosen one that's going to be providing all of this technology that was funded by the intelligence and Jeffrey Epstein in the first place.
What are they trying to do with this Ukraine peace proposal, this 20-point plan? It was agreed upon by the Ukrainian side, led by Zelensky, and we'll see what happens. Are you optimistic that thing actually gets through? And more importantly, what's the true intent here? Because there's always true intent. There's true intent behind everything. What's your view on what they're trying to pull off here with the Ukrainian peace deal?
Yeah, so the end game was always going to be that BlackRock extracts as much resources through its portfolio companies to prop up the US stock market as it can, and Russia ends up with a massive chunk of Ukraine. And then the CIA agrees not to expand NATO and tells the European Union what they need to do. And then you have a buffer zone. But the problem with that is they're trading with Ukrainian lives. And so eventually there'll be no Ukrainians left. That's how brutal these people are. And it's starting to hit that phase where more and more people in Europe are getting very, very unrested, saying, why are we subsidizing this thing? Why are we providing all of this money? It's not, more and more people are realizing that this is a war that Ukraine can never win. There's no return from this. There's less and less Ukrainian soldiers because, Russia's economy has got better, not worse. It's had a bit of an inflation, but its debt to GDP has gone down from 22% to about 9%. And it's actually using you can see its longer term bonds, the rates are going up slightly. So they have that issue. However, they've figured out all of the alternative trade routes and corridors via BRICS. And so they're getting closer and closer to China. So their economy is growing, and they're providing essentially, the war infrastructure that's needed for the BRICS side of the world, alongside China, and Iran as well. And so they've got that whole side carried on. But their economy, with the exception of inflation and long-term rates, which will eventually become an issue, it's surviving this. And so there is no winning for Ukraine. And at some point, that has to be announced. Now, America, of course, and Trump administration need to look like the president of peace, because that's his reward. He gets the Nobel Peace Prize probably next year for enacting the BlackRock policy and the financial industrial complexes policy. But he basically needs to perpetuate MAGA America first, strength, Department of War. We're bringing in all this money through tariffs, but his job is to just roll over the debt and create an acceptable narrative to the American people. But we're getting more and more civil unrest in America. We're getting more and more in Europe. We're getting more and more in UK, Australia, Canada. More and more of this is upsetting people. So I personally was shocked that we actually got a point plan, and that Zelensky agreed to it, because, well, Zelensky doesn't decide. He gets told when he's going to agree to it. He was a puppet installed by the CIA to execute this mission. But when he agrees to it, it means that we're slowly moving towards that eventuality. Here's the problem. The longer this goes on for, the more land Russia gets and the more assets BlackRock gets. And so neither of them are incentivized to end this. And America just gets to decide, what do we, what does it look like in order to actually have real peace? And that is the 38-point plan. I believe that we'll just have a slow creep, and I think there's more years to go. I would be surprised if this really is the end, because there's so much more to extract, and both sides that are the decision makers benefit from this, and America's got that perfect narrative. But at some point, Trump needs to get the peacemaker, Nobel Peace Prize type of narrative that the media wants to push out. We're moving towards what's it called halfway through? Interns, is it? The election in the middle in America? I forget what it's called. Midterms, sorry, not interns. Thank you. Yeah, it's moving towards midterms. So he needs successful narratives. I'm the president of peace. I'm solving 8 wars. I'm solving everything. Because at the same time, we're trying to figure out how to pump all of this money into the stock market, and there's more and more people. The economy is getting worse and worse and worse, and more Ponzi-like. So I'd be surprised if this is the end. I'd be happy to be surprised, because it's disgusting. It needs to end. It's horrific. Ukrainian lives are being used as pawns. Zelensky doesn't work for the Ukrainian people. Europe's getting more and more vassalized into BlackRock. Ukraine is just a collateralized debt obligation at this point. And there is no sign that Russia's going to be defeated or weakened in any way, shape, or form. So I don't think it will end, but I hope it will, and I'd love to be surprised.
Yeah, would it be an oversimplification to say that both sides, number one being the U.S. and the Western complex, and the BRICS side, the China, Russia axis, would it be an oversimplification to say that they're all, to a degree, kind of working together in this managed collapse of the existing world order into a new world order? Because that's what it sounds like. It sounds like they're not as adversarial as it may seem on paper.
I think a more accurate way of saying it is that the collective West is not sovereign, and it is run by the banks and the financial industrial complex. And they recognize that there is much greater returns, because they've asset stripped the collective West, in figuring out how to partner with the sovereign countries. And so they're negotiating with regional blocs and saying, right, we'll stop these hegemonic covert war, forever war operations, but what are you going to give us? We want to invest in as much of the regional stability, so that we have as much of our grips on BRICS. And they're going after BRICS via India. They're going after GCC via UAE. They've got Europe because that's in their sphere. And then there's real Africa and Central and South America. There's massive, all of their revenue is coming from China, but the closer you are to America, the more likely there are to be able to exert their influence. And so I would say it is the banks and the financial industrial complex negotiating with the heads of the regional blocs, which is China, Saudi Arabia, and other important regional players in this network.
Does this meeting between Trump and MBS distance Saudi Arabia from China at all? Because if you recall, 2 or 3 years ago, China brokered normalization between Iran and Saudi. Now you have this new defense pact deal. And of course, they're getting the leftover slop from the U.S. They're not getting the high-end, jets or anything like that. They're just getting the second tier and third tier weaponry. But will this at all create any friction between their fellow BRICS members by virtue of China and Iran in the process?
No, I think that everybody's on board the plan for the Middle East, and I think it was determined a long time ago. And October the 7th was an operation in order to reset the order, because the deciding factor in regional stability is you need Iran and Saudi Arabia to stop being, proxies in battle for the various regions, areas in the region, whether it be, Lebanon, Syria, Palestine, and Yemen, and these various other forever war zones. And so the difference here is that now Israel loses its purpose to receive Pentagon budget. So Israel was always subsidized by Pentagon budget, so that you have 350 billion come into Israel, so that they could agitate the region, make sure it's never unified, prop up the forever war model. And then America would spend $10 trillion of profit that would go back into revenue into the US stock market. Now, the Americans are starting to realize that this is a bit of a scam. And so America, I believe, or the financial industrial complex, is managing its divorce from the ideology of Zionism. Rather than saying we're protecting the Jews, they're now allowing people to realize that Zionism as an ideology, it was us that's being blackmailed. It was because of Jeffrey Epstein. It was because, it wasn't anything to do with us. If they didn't have that pesky AIPAC funding and they didn't control our government, we would never have supported ethnic cleansing. That's an Israeli thing. And so America is managing its strategic divorce. The media is pushing out, Jew hatred, Muslim hatred. They can use that for their civil unrest campaigns. They're allowing the narrative of Jews rule the world to perpetuate. You've got people like Tucker Carlson, Candace Owen, Nick Fuentes, various other people that previously would never have got as much traffic. Suddenly the YouTube algorithm is giving them the most popular views. Suddenly they're allowed to bring on people like Nick Fuentes that previously would have been, completely confined. But at the same time, you've got the military, which is the old nationalistic, which benefited from Israel. They want the Zionism narrative to continue, but the banks and financial industrial complex are saying, no, we're moving to regional stability. We want to invest with Saudi. We want to invest with UAE. We can continue blaming everything like Iran is funding all the terrorism when the CIA is. We can continue that type of narrative, but China's already normalized there. So it doesn't change anything. Everything between China and America, the plan of you're going to be regional, you're going to be a regional player. China's going to be the manufacturing base. The Middle East is going to be the energy. America and China are going to do this vast amount of AI and robotics investment. I believe that's all been set. But now we have to manage this transition where Saudi essentially says, we've got $1 trillion of investment so that you can build all your data centers and sell all your chips to us. However, we need Israel to stop receiving military funding because we need Palestine to be recognized. And then the GCC will put all their puppet governments in Syria. And so you had Jelani, the president of Syria, come visit the White House. And what happened? Trump immediately met with the executives, Larry Fink, Jamie Dimon, and everybody right after the meeting. So he legitimized the ex-head of ISIS, by bringing him to the White House. He's now the president. gave the banks all the deals that they can do, make sure that there's still a narrative that, oh, they're killing all the Christians. It's the Muslims killing the Christians. Using the media in order to push all those different campaigns so that Syria still looks like it's in chaos, but the banks get to buy up, do the deals, get as much as they can, and then eventually the sanctions will be lifted. And once you have the sanctions, you'll get one of the most prosperous, investable areas. And then eventually you get nuclear energy in Iran, you can lift the sanctions, and the operation has been complete. As soon as there is Arab security in Palestine, the Greater Israel project is over. And so you'd expect military funding to stop going towards it. You'd see the narrative of Zionism ruling America to be pushed further and further and further. And then eventually you'd get this managed divorce and settlement. And the Middle East goes into regional stability, which has knock-on effects on all the other wars, the covert wars, like Sudan, like Nigeria, all these other things. So you keep seeing Trump saying, oh, I'm going to help Sudan because MBS asked me to. So that starts to come to a resolution. You start to see media saying, drawing attention to something that was there all along, but they started drawing attention to UAE's backing of one of the sides of the RSF in Sudan. Remember, this is the clean break memo after 9/11, one of the regions of the 7 that America said they would destroy as part of the forever war model. And now you're starting to see things slowly come to an end because China's investing. And so Africa is slowly going to be able to start to use their resources. And it's interesting because imagine you're BlackRock and you're looking at birth rates down everywhere. You're probably going to do two things. You're going to say, where are the birth rates? The birth rates are in Israel, in the Middle East, the Muslim countries, the Jews in Israel, and Africa. Everywhere else, birth rates are dropping like crazy. So you've got that labor there, and you've got artificial intelligence and robotics. So that's why I think we're moving to multipolarity. And Israel eventually probably just becomes a GCC puppet government. You'll see the overthrow of Netanyahu, the extremists like Ben Gvir and Smotrich. They'll be chucked out. And then eventually, I think GCC puppet governments will be in Palestine, Lebanon, Yemen, and Israel. You'll just get an America slow retreat, which will in turn weaken the dollar and shrink the dollar into a regional currency.
Is it the financial plumbing? It's interesting you bring up the GCC puppetry, let's just call it. But isn't the plumbing of the financial system within Dubai supposedly very identical to the city of London? Have you looked into that at all?
Yeah, so UAE is building its own payment rails. India's been building its own payment rails. They're all connected into the Chinese payment rails, the Russian payment rails. So we've had, as part of the de-dollarization, the thing though is people thought that BRICS was a single currency. That was Goldman Sachs's plan. So Goldman Sachs wanted a BRICS single currency to try and turn the region into like Europe, vassalize it through a single currency, use currency warfare in order to destroy the region so that they could dominate globally. That mission failed. BRICS has decided not to launch a single currency. And so they started building all of the financial plumbing, all of the alternatives to SWIFTs, all of the internal payment rails, and then started integrating them. Remember, everything you know about UAE, well, UAE and Saudi, they tend to play good cop, bad cop in the Gulf countries because UAE is the only one that can buy Israeli stocks. Saudi's not allowed to buy Israeli stocks. Netanyahu privatized many of Israel's national assets. And so UAE has been acquiring more and more of Israel private industry. And so they're kind of doing it via these acquisitions. Now, in the West, you get a narrative, which is, oh, they're owned by the Zionists, that, AIPAC rules all of these different places. And, because historically they were under the boot of America via Israel, and the Greater Israel project is the Greater America project with plausible deniability. with a Zionist narrative so you can manage the divorce when you need to. But now you've got, many of these alternative payment rails, but they want to sit in the middle. They want to be neutral. They want to have a great relationship with America as a regional power, and they want to have the best relationship with BRICS because that's where all their revenue comes from. So essentially, what are they doing? They're building independent payment rails, and they are, I think they'll enter into depegging. They're buying up Israel, which gives the American, the financial industrial complex their power. And at the same time, they're buying as many assets and foreign direct investment to stringe out all of the returns, and be able to influence all of the corporations, so that they can be used in order to build in the Middle East because they don't have the population there. But they need all the revenue from China because that's where the revenue is coming from.
Interesting. It's always fascinating talking with you, Simon. You're kind of like a geyser of information and knowledge, and insights. So thank you so much for coming on, my friend. Anything else that you'd like to talk about before we bring this thing home?
I think we covered enough there. I think the comments we got last time is people needed to watch it like 3 or 4 times. And so, I think we'll leave people with that. I'm happy to come again. I would say just a quick thing. What I do every week is I do this week in Bitcoin and technology, this week in macro, and this week in geopolitics. And so every week I take all of the news and retranslate it through financial flows and following the money. And you can subscribe to my channel on YouTube, Simon Dixon. And it's a journey. So you can start to watch it each week. And more of these things that are very overwhelming, they'll start to make sense. And the patterns are so recognizable and so obvious once you've seen it like a few times and more. And then you can make better decisions because sadly, the media is not journalism. It's not the truth. It's a function of what those that are paying for it want you to think. And often they want you to think the opposite of what they're doing so that you're the bag holder for their financial agenda. And that's what I'd love more and more people to understand.
Very good. Well, where can people find you if they want to see more of your work?
So I'm on, I'm on X every day at Simon Dixon Twit from when it was called Twitter. And simondixon.com is where I publish all my work. And I have a YouTube channel, Simon Dixon, where I go live every week to cover the Bitcoin technical, macro, and geopolitical trends for that week.
Excellent. We'll have the links to all of your socials down below. So check them all out, guys. And if you enjoyed this podcast, drop us a like and comment, go Simon, go in the comments section. If you agreed or disagreed, let me know either way. There's plenty of stuff to agree and disagree on, I'm sure. But I do, in fact, read all the comments. So drop me your thoughts. I will read it. And I will reply to a small handful of them. So thank you so much for your time, guys. Simon, thank you so much for coming on. And be sure to support the channel by joining my Substack as well, or by buying any of the cool products that we have in the description box below. Any of the affiliate links, sponsors, that does go into supporting the channel. And in tandem, you get a pretty cool product in return. So with all that said, I will catch you guys later. Have a great one. Until next time. Bye.